Hello, welcome to today's new episode. And today I'm going to discuss on a very popular, well-known company, which is obviously one of the market leader in its space. But before that, I have a disclaimer that I do not have any buy, sell, hold recommendation with this video. The stock or stocks I'm going to mention in this video is just for academic exercise. If any investor or trader is interested in this particular stock or stocks, you may take your own call or check with your registered advisor. So without making further delay, let's get into the stock called Hindustan Unilever Limited. Now you must be wondering why I'm discussing this very common and stagnant type of stock, Hindustan Unilever Limited. uh, just because uh, the company, this Hindustan Unilever, belongs to, that this is from the FMCG category, FMCG sector. And FMCG always find good when monsoon becomes good, because these companies have larger penetration in the rural market, because rural India is obviously much bigger than urban India, and rural market gets boosted up once your rural market is very much dependent on agricultural economy, and once monsoon becomes good, then rural economy also gets boosted, and that positively impacts this type of FMCG players. So good monsoon, prolonged monsoon, uh, rural inflation has come down, overall inflation has come down, especially rural inflation has come down, and overall rural economy has started boosting up. So FMCG is not the only segment like which is little bit more dependent on rural economy. There are other segments as well, there are other sectors as well, but in the FMCG space, companies like HUL, Dabur, Marico, they are very much dependent on uh, mo- eh, this type of rural economies play. And over the period of time, we have seen these type of companies remain stagnant for quite a long time. They kept on moving within a range, kept on hovering at the lower range. So the question is this the time to start taking a rally or riding a rally? Difficult question, but true that this is one trigger. This FMCG is a one trigger, but how much this type of trigger can boost up a company or its financials? So that is a big question. So companies like HUL, which are significantly big, for them, uh, only rural economy. I don't think only rural economy can boost up the its entire financials. There are certain other triggers which are required. So that trigger differs from company to company. Like HUL, for HUL, premiumization is a very big play. So premiumization continued to gain traction for HUL for quite some time, and led by new product launches, improved pack formats, and strong innovation across the sector. Uh, and we have seen promotion in the digital media becomes very much important. Digital media for HUL now accounts for around 50% of total spending. Quick commerce, we have seen, started playing very significant role. So quick commerce for HUL turnover doubled year on year in Q1 FY26. Uh, eB2B platform Shikhar now serves 1.3 million retailer nationwide. Management said margin to improve sequentially in Q2 FY26. Now, this margin plays a very significant role in case of this type of companies, this type of retail oriented companies. And how margin can be improved, that is due to the better pricing dynamics, product portfolio mix and ramp up of productivity initiatives. So, management guided 22 to 23% near term margin, matlab guidance, near term margin guidance. So, one another very significant thing that is HUL is demerging its uh, ice cream business, which is the entitlement ratio is 1 is to 1. Now the question is, 1 is to 1 is ice cream business. How much is the contribution of the ice cream business? Its contribution is not 50%, obviously, significantly lower, but management has decided 1 is to 1 demerger, and this is likely to take place in Q4 FY26. So a close watch out of the impact. How does it go? And along with that, I just wanted to mention here that HUL had very significant volume growth of 4% year on year in Q1 FY26. So 4% is significant for a big company like HUL. The company in the home care segment, company witnessed single digit volume growth. Household care volume growth was double digit. Beauty and well-being's value growth was 7% year on year. Hair care segment had mid single digit volume growth, and skincare and color cosmetics segment has low single digit volume growth in Q1 FY26. In the personal care segment, revenue grew 6% year on year in Q1 FY26, and in the healthcare segment, very significant is the Oziva takeover. So, for Oziva, revenue tripled in a year to INR 450 crore, and new launch was Nexus, which is a science-backed premium hair care. So these things are close watch out for HUL. A big company with some trigger obviously is a watch out. And in the food sector, the company revenue grew 5% year on year, where volume grew mid single digit. Tea segment had high single digit growth, coffee had double digit growth, packaged food had mid single digit growth, nutrition drink had sequential improvement. New launches like Red Label Instant Spice Tea Mix was a new launch, and Boost Protein for adults was also a new launch. So altogether, good global, good rural economy is a booster. New launches, premiumization are the growth driver. Now we have to see how this pans out for HUL, and also keep in mind the demerger thing. Let's have a close watch on the company, and hope that uh, this you find this video informative. So don't forget to subscribe my channel, and happy trading, happy investment. Thank you.